What we're going to talk about now is we're going to talk about how to basically look at a set of financial statements and get a quick understanding of what's going on. So first thing we're going to do is go to yahoo.com/finance. And I'm going to pick one of my favorite companies, the Apollo Group, but you can look up different companies. You can try and find a healthcare organization. And we're going to say click enter. And that gives us this long list. Well, if we look at this list down here at the bottom, it has the three main financial statements we'll be using, which are the income statement, the balance sheet, and the statement of cash flows. So let's take a look at the income statement. Now, the income statement is for a period of time. In this case, you can see it's annual data, which means it's for an entire year. You can look at quarterly data, but we tend to look at annual data. Now, when we're looking at the annual data, what that means is from the beginning of the year to the end of the year, we earned so much money, we spent so much in expenses. So in this case, for the year ended August 31st, we earned $4,733,000,000. Notice we can see that all numbers are in thousands. We had cost of that revenue of $2 billion, and so our gross profit, which is profit before administrative type expenses, is $2 billion, $2.5 billion. Then we have our operating expenses, and we finally get down to this number called net income. Now, if we're looking at a nonprofit, instead of calling that net income, we'll call it excess revenues over expenses. And if we're looking at a government, well, we won't exactly see a number there. What we'll see is, again, excess revenues over expenses. That is how much more revenue we made than how much we spent. Now remember, with accrual accounting, this doesn't all mean cash came in and cash went out. This meant we earned the revenue and we recorded the expenses against that makes sense to record against it, such as depreciation for our buildings, wages and salaries for the time period that we earned the revenue, etc. Now I'm going to switch to the next statement, the balance sheet. And you notice the balance sheet is for a period ending. And what we mean by that is this is a snapshot. This is as a moment in time. So this is as of August 31st. Now our total assets are $3,269,000,000, and our cash and receivables and all that is $2,300,000,000. Now a current asset is something that's cash or cash-like. It's going to become cash within the next year. So it is liquid. It's something we can use to pay bills, etc., etc. These other long-term assets are the type of assets we were talking about with depreciation. And I will talk about goodwill a little bit in a separate video, but goodwill doesn't mean, even though Cleverly says it does, goodwill does not mean that the company's well-liked. It basically means that when the company acquired something, they paid more for that thing they acquired than it was actually worth. The reason they may have paid more is because they got something that was intangible when they bought it. So if I bought a company that's got a great client list or in a great location, I may spend more for that company than I would just for the building, mainly because I need that client list or I like that location. So goodwill doesn't mean what it thinks, and we'll talk about that more in another video. Looking down here at liabilities, these are amounts we owe to other people. Now, the current liabilities are just like the current assets. They're money we're going to spend in the next year, cash that's going to go out. So accounts payable, other current liabilities include things like wages payable, etc. And then we've got our long-term debt. And this is things that we owe money that we will pay out over a longer period of time. So we may have bonds, we may have mortgages, etc. That'll all be in here. Now, assets minus liabilities in business, in a for-profit, equals equity. In a non-profit, this would equal net assets. Net assets. Assets minus liabilities. Net assets. And in a government, this would be called fund balance. So they're all the same thing. Equity, net assets, and fund balance are all the same thing. They represent the difference between the amount of assets we own and the liabilities we owe. And that's all that means. All right? Last statement, the statement of cash flows. Now, notice this starts with net income, but remember, net income isn't cash. So we make some adjustments. So, for example, we add back depreciation because depreciation isn't cash. So we add it back. We subtracted it originally, now we're going to add it back. Any adjustments to net income? Sometimes they're subtractions, sometimes they're additions. This is an addition. Changes in receivables, So if our receivables increase, that means that we had revenue that we included in net income, but we didn't get the cash. So we'll subtract that amount. So you can see in 2011, net receivables increased by 121,000. So we're going to subtract that from the 572. Same thing here with liabilities. If we paid down a bunch of bills, we'd subtract that. If we added a bunch of bills because we didn't use the cash, we'd increase that. So this is cash flow from operations. So we had 897 million come in from operations. We used 164 million to buy buildings, to buy equipment. Investing from the company's point of view is not stocks and bonds. It's the investments, it's the capital purchases, the capital investments that the company makes. And in financing, this is where the company sold stock to raise money. In this case, they rebought stock. They bought stock back off the market, and they used some of their money to do that. But we can use money to sell stock, to raise money. We can borrow money to raise money. Here we paid down loans instead of borrowing. So you can see that we had we paid out $775 million for financing. So we bought stock back and we repaid some loans. And you can see the change in cash, and then there's the ending cash balance. And notice that the change here would add back to the difference between the beginning and the ending and give us that same number. So that's a brief overview of the financial statements. Hopefully that makes some sense to you. I'm a little longer than I wanted to go, so thank you very much.